Hello, everyone. Before we begin, let me ask you something. What happens when some of the largest asset managers in the world quietly increase their positions in a company by nearly 3,000%? And what happens when that company isn't just another tech stock, but one positioning data itself as a new asset class? Today we're talking about Datavault AI Inc., trading on the NASDAQ under the ticker DVLT. On March 3, 2026, the company highlighted a significant surge in institutional ownership, paired with continued commercial expansion across enterprise and media markets. And when you look closely at the numbers, the scale of this shift is hard to ignore. Between the fourth quarter of 2025 and February 2026, several major asset managers dramatically expanded their holdings. Let's start with Vanguard Group. According to public filings, Vanguard increased its stake from roughly 393,000 shares to approximately 11.8 million shares. That's not a small adjustment. That's a strategic repositioning. Next is State Street Corporation, which expanded its holdings from about 335,000 shares to 10 million shares. And then there's BlackRock, increasing its position from nearly 136,000 shares to around 4.1 million shares. These moves represent percentage increases ranging from approximately 2,800% to 3,000%. So the real question becomes why? Institutional investors typically don't make moves of this magnitude without long-term conviction. According to company leadership, this increased participation reflects confidence in Datavault AI's execution strategy and long-term revenue model. But ownership growth didn't happen in isolation. Operationally, the company has been expanding across multiple fronts. Datavault AI focuses on data monetization, credentialing solutions, digital engagement systems, and real-world asset tokenization infrastructure. In simple terms, it's building secure systems that allow enterprises and media platforms to capture, manage, and monetize data at scale. And the commercial footprint is growing. The company announced agreements with Sports Illustrated and NFL Alumni, extending its presence into premium sports media ecosystems. These partnerships increase brand visibility while embedding its technology into high-profile platforms. Additionally, Datavault AI completed the acquisition of API Media, strengthening its media distribution capabilities and enhancing its overall data monetization infrastructure. On the capital side, the company previously announced a $150 million strategic investment from Scilex Holding Company in 2025. This infusion of capital reinforced its balance sheet and provided additional resources to scale operations. CEO Nathaniel Bradley summarized the broader vision with a powerful statement. Data is no longer just information, it's an asset class. That idea sits at the center of the company's strategy. If data is evolving into a tradable and monetizable asset, then infrastructure becomes critical. Security, compliance, distribution, and monetization tools are no longer optional, they're foundational. With institutional ownership rising, commercial relationships expanding, acquisitions completed, and capital secured, Datavault AI is positioning itself for increased visibility and sustained growth throughout 2026. Of course, markets are never guaranteed. Institutional activity doesn't eliminate risk. But when capital flows align with operational expansion, it often signals that something larger may be developing beneath the surface. So now the decision is yours. Is this simply a short-term wave of attention? Or is it an early-stage growth story that institutions have already begun to price in? Keep watching closely. The next few quarters could be pivotal. And if you want deeper breakdowns, strategic analysis, and updates as they unfold, stay tuned. This is not financial advice.